What's up, everyone? It's Tuesday. Time for another trading room with the 5ers. We got me, Jonathan, and we got Victor about to do some live trading. Then we got Saul coming on in a couple of minutes, and the king of scalping. Can we call him the king of scalping, Victor? Do you think that's fair?
I think that's a fair title. Yes, in my world, he is. I can see his qualities, and he's up there with the best ones I know. So yes, I would
Definitely.
definitely say he's the king of scalper.
Let's see. Do we have any interesting people in here? Yeah, we do. We got Henry. What's up, Henry? Hope you're doing good. I've been seeing you around quite a lot. We got Paul Brown as well. What's up, Paul? And we got our in-house Bitcoin hodler, M76BB. And we got Felipe. Dude, Victor, I think you have to start pronouncing all the names because
Yeah, well, maybe I'm not sure I'm much better than yours, but I think he's. Let me see. From the names, it has like different origins because Bernardo.
yeah.
Which sounds
So
like
guys, we're
something.
transitioning from doing technical analysis to name analysis here. So if you want your name analyzed, make sure you leave a comment. Felipe. That's we're just gonna go with that. We're gonna go with that. You know what? Let's just Moneyman. I like that. Yeah, Moneyman Bernardo. Better. Okay. Lots of people in here. Hope you guys are doing good. Hope you had a good. Why are you wearing a mask, Victor? This guy says. Well, without the mask, you wouldn't really be a mask trader, were you? Like that. Would it make a lot of sense to have a mask if you like you're not the unmasked trader. You're the masked trader, which obviously need a mask for that.
Before I put on the mask, I thought, how can I be the mask trader? And the only solution I could come up with is having a mask. So to me,
Yeah,
it's a given. There's no
that and
way I can be a mask trader without a mask.
yeah, and viruses. You don't want to catch any computer viruses during the live stream, so that's very important. Okay, so enough of that. Let's entertain you guys while we wait for Saul to join. We have a trade hitting. So yeah, let me put up my. Pull up my no, at this very moment we don't have any discounts available, but if you subscribe to the channel and we hit that next milestone, which I believe is was it 40 45, yeah, 45K, we're gonna do a little giveaway here for you guys when we do. I think we're about soon there, almost there, so make sure that you subscribe to the channel. Yeah, I might have to put a mask on as well because Victor is quite profitable. We'll talk about that later. Quite very very interesting. We have some ideas we want to show you guys with. We're trading very differently, but we're both profitable, and it's interesting when we have an experiment that we're going to show you guys later about that. Okay.
For sure.
Yeah.
We will discuss that later, but I think it's very
Yeah.
insightful for everyone to stick around, hit the like button, just in anticipation for when we will be showing, some couple of last couple of trades that you can compare how we stack against each other. It's not about competition, but about our stats, how we being different traders can still, be profitable. But I see in the background we have the king of the day,
the man,
man
the
of the
king of the
moment.
day. I was gonna say the man of the day, but yeah, the man of the hour, the king of the day. That's a good one. What's up, Saul? Welcome.
Hey, Jonathan. Hey, Victor. How are you guys?
Victor,
Hi, Saul. How are you
no,
doing
Saul.
today?
What I have a question for you. If I have a 70% win rate and Victor has a 30% win rate, that mean we have a 100% win rate together? Because that's actually we talked about that earlier. Like maybe we'll have to let's try that out. So if I take the trades that he doesn't take, maybe I can take the 70% of the losers and turn that into
Yeah,
winners.
that's a good plan. That's a good input.
So yeah, I also to show you guys, we talked about before we kind of go into the into the low time frame start scalping. I want to show you the swing trades that we were taking. So yesterday I went long USD, closed that one for a quick I don't know what to call it, scalp, swing, short, or whatever, but it's just down to that level. And then we talked about NCD CAD. We talked about this one as well. And it had that beautiful, we talked about how NCD CAD came down to support right here. We wanted to see a bounce, beautiful bullish engulfing candle right here. And then on the 1 hour, beautiful break in beta. So quick trade this morning on that one as well, and a winner. So just to show you guys, give you guys an update on the bootcamp account that we're working on. I'm gonna post some screenshot here for you guys. Yeah.
Before you go to the bootcamp account, we talked about that Kiwi Cat pair, right? You showed us the setup, why you're interested in, and that's not being a pair that I trade, but I somehow start recognizing the patterns that I look for, and I did the analysis. Remember on live. So let's look at how price reacted to those levels that were of interest to me.
Wow.
Remember, these are the two areas that I identified as being possible areas where price could respect and rebound. So if it is going to rebound, change direction. And this doesn't happen all the time, of course, but in this time around, you can see how those two levels, the first one, let's see, I'm not going to make it very long. The first one did have a reaction with that wick, and it was the second one that actually was the turning point of the market as it is going up. And that's exactly how this doesn't happen all the time, of course. I have a low win rate, so it means more often than not, those levels do not get respected in the end. But when they get respected, the way I do it, I'm able to identify those areas that it is likely to respond and reverse from. And this time around, it worked like a charm.
Nice. Hindsight trading is the best type of trading, right? Let me.
Yeah, I didn't trade this.
Let me.
Didn't trade this one.
Yeah, exactly. So yeah, the quick update on the bootcamp challenge here. So you know that I did an experiment here live with changing the take profit approach of the swing trading system. So kind of like applied a scalping take profit approach, just swing system, basically having a negative risk reward, because I've interviewed a lot of successful traders with the funded traders with the with the 5ers doing traders interviews, and I've seen that a lot of people are actually quite profitable having a negative risk to reward ratio. And I'm like, hey, yeah, I got to try that out. I don't believe it's going to work. As you can see right here, my average profit is 259 on this one, and my average loss is minus 414. But I have a 73% win rate across 26 trades now. So you can see that the equity curve is nice. This is what I want to see, like almost a 45 degrees angle, continues to the upside. You can almost see the moving average here as well. It's bouncing on that moving average. So this is update on this one, and just wanted to show you guys this because I had a lot of naysayers. I had a lot of people saying like, yeah, you're not going to be able to be profitable with a negative risk to reward system. And then also because of Saul, it kind of inspired me to try that out as well. All right, Saul, enough of us, more of you. Let's pull that chart up. What are we looking at?
To be honest, guys, I haven't seen the charts today, so I'm just scanning,
Nice.
the market. So I think it's a good opportunity to to go through the my scanning process. I always try to start with the Euro USD because it's my kind of my bread and butter, and my bias here has been confirmed. I remember we talked about trying to go long around this area, but we didn't have that pullback to join the movement, and my bias is still to the long side. But I think we're overextended. I think the next movement is to the downside. We need to wait for kind of a pullback or something so we can join the next leg to the upside. So kind of nothing to do over here. Dollar yen, I'm still biased to the downside. If we zoom in a little bit, I like the price action that we're having, like strong impulses to the downside, and then weak movements to the upside, strong movement to the downside, and now we had recently a weak movement to the upside, and we're in the early stages of potential strong movement to the downside. So this is not a bad movement not a bad time to try to join the leg to the downside, which could be could be similar to this one or to this one or to this one. And just from seeing the difference between this kind of impulse to the downside, you see it's kind of strong, and then how the movements to the upside have been more like a weak channel. That's why I call this like compressions. Those are weaker movements to the upside, and when they meet supply areas or strong selling areas, we see these strong reactions to the downside. So as long as we continue with this pattern, okay, we had this last weak movement or channel to the upside, and now we need to confirm if there's a strong selling area here to initiate a next strong movement to the downside. So if that's in place, we can then go to the lower time frames and start to look for selling opportunities. Right now on the 5-minute chart, we're kind of I cannot short right there. I expect a bounce around that area, but any kind of pullback towards, let's say, this area probably, or this area right here, those are areas to look for shorts. So I have an eye open here, and the other pair I was looking at was dollar CAD, which looks very interesting in the price action, because we had, I don't know what news we had a couple of days ago, and we started a very strong movement to the upside, to the downside. We have like a acceleration to the downside, and if we look here backwards, we have weak price action. Okay, so I don't think we're going to have a lot of buyers here. Okay, we already broke down the last strong buying area at this point. So this has the potential to, of course, with some pullbacks, but to go all the way to the next demand area, which is down there. So now I would have to go to lower time frames to try to look for opportunities to join the down movement. That's for dollar CAD. The only challenge I'm having with dollar CAD is the fact that the volume is not there, or the volatility is not there. The ranges to trade are not being very, very, very large. So there's not a lot to. Let me give you an example. So if we measure, from this pivot to this pivot, we have, this is actually not that bad on the 5-minute chart. Let me see on the 1-minute chart. All this range, it's only 5 pips, which is not a lot. I would like this to be a bit more, but I have an eye open on this pair as well, dollar CAD, looking for short opportunities. And I like the fact that I'm aligned in my readings. Dollar yen, I'm trying to go short, and dollar CAD, I'm trying to go short. So I don't have like conflict of interests in my lectures. And the last pair I was looking at was pound yen. On the dailies, it really looks like it wants to make a turn. It has been, we have a really large impulse to the downside, and we're kind of pulling back and this pullback is slowing in momentum. It's getting weaker and weaker. Let me see if we can get some confirmation of that. If we zoom in, how can we confirm that? Maybe with
we have a question here about in terms of confirmation. I know you don't really have specific confirmations, right? You just want to see some type of reaction at the level, right? Like, or is there anything specific you're looking for in terms of confirmation?
Yeah. So in this case, I kind of see that we had the first stages of the pullback, and now we're kind of going sideways. So I'm just want to make sure there's something to tell me there's less strength behind this last movement. So probably an indicator of a relative strength index or something like that would give me that confirmation that actually behind each one of these movements to the upside, there's actually less strength because we are at that point, at that ceiling area where we could easily see, a turn and a leg to the downside. So this case, okay. So let me try to confirm that. I'm not a big user of indicators, but let's see if we can.
What pair is that? Is that GBP JPY?
Yeah, GBP JPY. So now I need like
RSI.
See. Yeah, kind of an RSI. Where is it?
Let's see if I can find it on Trading View.
It's an insert, and then
yeah, there you go.
Let me see the.
So what you're looking for is you're trying to confirm that there's a less and less strength of the up moves.
Yeah. So look at So look at this. So we have like what it looks like triple top, right? We have one top, two top, three top, but you can see the strength behind each of the movements to the upside has been weaker. That this time, the first time we went to the upside, it was with certain strength behind. The second time we went to the upside, there was less strength behind, and this time it was kind of with a similar or little less. So I see there's a decrease in strength behind each one of the movements to the upside. The triple top we're seeing here. So that's kind of that kind of gives me more a confirmation behind the movement I wanna look for. Now, this kind of setup is a good setup just to take it and let it go. I don't not necessarily I need to be scalping. I can do some scalping around it, but it's a good setup just to sell. To set your stops above those highs and just to let it run and to see. If it gets momentum to the upside, you will get stopped out. But if it goes to to the downside, you can potentially get a movement for the next available key level, okay, which is down here, and you have a very nice risk reward. You can get, you're risking 160 pips and potentially getting 700 pips of rewards. So this could be a good just set and forget the trade.
I actually just took a trade on USD/JPY while you were talking about your setup there on USD/JPY. So I pulled it up and I looked at the chart and I looked at your level and decided to, I might as well just take a trader. So I'm going to show you just quickly that one. So this is what is it? It's USD/JPY on the 5 minutes. So we looked at shorts, right? But I looked at possible shorts, and what I saw here was an uptrend, higher highs, higher lows, and a break of structure right here. So we had a 1 hour candle closing below. Now we are still at some type of support, but it looks like I'm seeing the first clues of a change in behavior of this trend. Then we might break lower, and then when going into the 5 minute, I thought this level here looks like a really good level to short. So if we have a good reaction here to short, then that's what I wanted to short. But I also saw at the same time that we were hitting some type of support area where we had a good reaction. So I thought, when we had that 5 minute bullish candle, I entered on that one, and then the idea was to have it run up here. But I took profits when I realized that on the 1 minute we had a reaction to this level. So and now I think if we can get up in this region, I think we could be good for shorts. Is that kind of like the same level that you're watching?
Yeah, you're looking at that. That's dollar yen.
Yes.
On the dailies, the dollar yen is already kind of done that move to the downside, okay. and on the pound yen, which is the pair I'm looking at, pound yen is kind of haven't done that turn.
All right, so you're looking to short dollar yen because you're thinking pound yen because you're thinking that this move it's basically lagging behind.
Potentially, yeah.
Yeah. All right. That makes
I got
sense.
I got a question. I think you did something without explaining too much about it, but I think it's very, very potent what you just did. Could you go into some more details? How can you go from a scalper to upgrade your trade for
Yeah.
I think as a swing trader, right? Because you were thinking this trade is one you need to let go and let it run. You can get 700 pips out of it, with a 100 pip stop loss, something like that. I think you mentioned. How do you know when to do this? Because
That,
this is potent when you are able to be, you're focused on the 1 minutes, the scalping, etc., but you have the eye to recognize the moment you have to let go of that way of approaching the frame you have for approaching the market, to then go switch for a swing trade. How do you know that? What tells you that you're able to do this?
You always have good questions, Victor.
yeah, you always do have very good questions.
I'll tell you what. It's not that I'm trying to do something different here. Remember that the way I understand scalping is going from key level to the very next key level, right? So and with that premise, you can scalp on any time frame. So I think what I'm attempting to do here is a scalp, but on the daily time frame, okay? Because I'm looking for the next pivot point to be formed, which I'm anticipating is going to be where we are now, and I'm aiming to get the next leg to the downside, which is potentially going to be all the way down here, which is the next, on the dailies, you don't have any key level in between where I'm getting in and the point where I want to get out. So I don't see this being different than a scalp you can potentially do on other time frames. The thing is, for these setups to align on the dailies takes so long, so that's why you don't see me taking um, um, trades on the dailies, because it might take weeks for the markets to give you a setup on the dailies, on the daily charts. So that's why I kind of get my bias on the dailies, and then I look for setups on lower time frames just to be able to to make some money. But when the opportunities are there on the dailies where I see the setup in front of me, then it's worth taking it, because those are the times you can get 1,000 pips a setup. So it's kind of the same setups I'm looking on lower time frames. It's just the fact that I'm seeing it here, just while we were scanning the markets.
So basically, to you, you're not doing anything different. The only thing you're doing is you're finding, instead of finding an area or the direction on the daily, you actually find the setup on the daily. Correct. Where you have the key level, and you identify the next level, but not on the 5 minute or the 1 hour, but on the daily. So you're just on a bigger time frame, which is what it is. So basically, you're doing the same, just on another time frame.
Correct. I got both the bias and the setup on the dailies instead of getting the setup on lower time frames.
And you don't use, let's say, get your bias from a higher time frame. Although you just mentioned you get both of them from the daily, but you don't, let's say, use the weekly for your bias for the daily setups.
I kind of know, without going into the weeklies, I know how the weeklies are going to look. But what's most important for me is the fact that recently we have this strong movement to the downside. We had this kind of I don't know, longer movement to the upside. We can see how long it took the market to go from this point to this point. It took how many candles? So that was 174 days, and then to go from that point to that same level, now this time it only took 17 days. So it was, we can see this movement was way stronger than this movement right there. So I'm just looking for the the pullback and the next leg to the downside.
Yeah. Nice.
That's
Nice.
interesting. I think, I mean, so, you know, the problem that I have is knowing, I mean, that would be like my next step in like, I don't know if I have to adjust the trading strategy, because the results are quite good, but I think we always have to look at least ask yourself, can we improve? Is it possible to improve? So I'm thinking my next step, like the next step I want to test is, how can I determine, you know, which of the trades I take will be runners? Like, can I, is there something, I look at, you know, if I look at my history, I look at all the winners, all the big winners, or all the trades that are runners, like, how can I,
Yep.
is there any way for me to, you know, anticipate that they're going to be runners? So, but what you're doing is just you're taking the exact same trade on the daily as if you would on the 5 minute or the 1 minute, right? So it's not about deciding if this trade is going to run or not. It's basically it's the same system, right?
Yeah. Now
Yeah.
I can tell you, I'm going to, if this starts working out, you know, if it goes in against me, I'll just take the loss. But I already know that if this starts running in my favor, I'm going to struggle letting this run.
Yeah.
I'm not very
me
good
too.
at
I
it.
see. That's a huge move. That's a big move.
It is.
I would, yeah, I would take profits at like one to one. I think.
Yeah, I'm not very good at waiting, and that's why I don't, you know, trade a lot on larger time frames. But now that, you know, you see the setup, you have the confirmation, everything is there, so it's worth taking it.
I've realized that I'm very good at waiting for, like, I'm very good at waiting for entries. I've realized I'm good at waiting for, like, the entry triggers, like the right setup to appear, but I'm not good at, you know, waiting for the trade to move. That's my biggest problem. Like, I'm in the trade, and then I'm profit. I'm like, you know, I want to get out of the trade as soon as possible, and I actually think that's not a bad thing. It's not a bad thing wanting to take profits. Victor would say it is a bad thing, though, because if he would be taking profits like I am, then he would be profitable.
Yeah, that's correct. But that's because the thing is, you have to know your data. What is the data that belongs? Let's say how far the market moves when you are right, and how far how far does it get? You know what the drawdown is while you're in your trade, before it actually starts going your, when you have those data, those metrics, then you, in my case, then I can be more comfortable knowing that this is within the measured, within the norm, and I can relax. When it's outside, when it's an outlier, that's when I get a little bit stressed and I start, you know, doubting what I should be doing. But as long as it is within the what I measured in the past, then I shouldn't be touching it. I should just let the odds work in my favor. But to that extent, Jonathan, you mentioned, you asked a question there. How do you know which one to be a runner? And I think it's similar with what Saul does, although I have it a little bit different in my approach, or in my, you know, the sequence of the steps that I do when I start top-down analysis. And I ask myself this question when I start on the monthly and the weekly and the daily, and as I go down, I ask myself, do I have a setup in this time frame? And if I usually it's no, because indeed they don't come along as often. But if the answer is yes on the daily, that's the cue for me to look for that runner. Go to the lower time frames, get an entry, and if I do get an entry, a valid entry, not one that I force, but a valid entry on the lower time frames, and that will be, since I already have the daily setup, those are the ones that I let go and let run. And to me, I make it as simple as possible, right? No guesswork. Do I have it? Yes or no? And if I have, then I know, okay, if I get a signal, I will let it run. Either completely or a portion of it, and that's how I do it. So basically it's the same thing. I have the same setup that I look on the lower time frames. There are the same setups that I will be identifying on the daily or the weekly, and the management is also very, very similar because it's the same setup. But that's the way I approach it. I just ask myself yes or no. Do I have a setup in that time frame? Yes or no. And depending on that answer, I can let it run or not.
So I'm looking at GBP, JPY, and by the way, Victor, thank you for that. I think that's very that definitely the same way of logic I have when I'm gonna look into this, and I do suspect that the 4-hour setups that I do take, if there's confidence between them, and like if it's a break and retest on the 4-hour and the daily, then obviously if there's alignment between the two, then maybe there's a higher probability of that being a runner. But I'll have to look at the statistics and see if I can find anything. So Saul, you are short from current levels with a stop above these highs, and I'm not sure where your TP is, but probably down here.
A bit higher, but yeah, around that area.
Like that. But anyway, wouldn't the like you don't want to wait for this range to kind of like break, like no signs of direction, because when we're looking at the 4-hour here, but you also talked about the relative strength index, the RSI. Maybe would the RSI in this case then help you determine if it's worth entering the trade or not at current prices?
Correct. Yeah,
so
because we see. Yeah.
So I mean, you wouldn't look for like, just a breakdown here, and then when you break these lows, but then of course the risk to reward would be much different, I guess.
No, but that would give me like extra confirmation, and in that case would be a good opportunity to add into my trade. So if I get that confirmation, I might add into my position.
Nice. All right. Okay. And if you start to see a move kind of breaking out here, then you're ready to get out of the trade.
I'll just take it. Yeah.
Okay.
Henry
is saying. Henry's talking about a USD JPY short. Let's open that one again. I got it right
just
here.
Profits now. Nice.
Oh, nice. Can I?
Yeah.
Let me pull that up.
I just took profit there.
When did you?
Right now, we just I marked these areas when we're doing the analysis previously. So I just saw how the market was entering this selling area, and I just took one trade and I took profits down here.
Nice. That's
and
so quick.
I'm glad I'm zoom in, because I'm no longer like what it looks like convincing on the 5-minute chart. When you zoom into the 1-minute chart, you suddenly see things different. So I'm not 100% convinced about the top area anymore, but I do like this level, the area where I just short. So I just took one lot, and I took profits, at the support, because before this bounce happens. And let's see how strong is this moment to the downside going to be, and then if there's more, another pullback, I might short again. So that was just a little scalp.
Nice. Yeah, I'm short on USD JPY again as well. So I'm looking at this rejection, so this area that I said earlier, if we have a reaction in this area, I want to go short, and now we have that 5-minute bearish candle. So I'm looking for a move down here, and then I have stop loss above this area, because looking at the 1 minute, I'm also looking at this level right here. I think we might have reactions inside this area, so I want to make sure to have my stop loss above. But yeah, like you said, if price starts moving like this all the way up here, then I would say that we have a different structure. I no longer want to short that, but I can definitely look at shorting it down here, because then if we go to the 5-minute, like that would be too high. We'll see.
Yeah, so we took it the same trade. You will just hold it longer. Because you took it on the 5-minute chart. I just took it, off the 1-minute chart. I just took some pips and out.
My risk reward on this trade is, I believe, a little bit less than 1. It looks like it. Got entry between stops and TPs. I guess it's slightly lower than 1.
I wanna show my screen, because I was looking, while I was quiet in the background, I was looking at GJ, pound yen. Let me show my screen, and I see the same. Of course, we can see the same. I see the same price action that you mentioned, right? So where the impulsive move is very obviously to the downside. So
Yeah.
we then consider this move to be a pullback, and I don't have anything to the left to other than this high to assume that it could be going continue its path. But of course, that's not always the case. Price can do that in any place. It eventually it doesn't need to do that perfectly all the time. So and given that, and if I go to the lower time frames, so on the daily, I can't find an area where it should be reversing, going back, but I do see the market structure, which is very obvious. And we are, I was looking to get some kind of reversal pattern, some quasi patterns, trying to identify anything in here, but I couldn't find anything that is clear to me. So what I did find is this reversal pattern. You can see it. Let me see it here. Well, it's actually there, but it doesn't matter, right? We have an established uptrend. That's the first thing that I look for in the quasi. And then we had a break of the neckline and a retracement, right? Left shoulder, and this could be the potential right shoulder. And now I'm already late, you would say, quote unquote, because it already made that movement. However, the market doesn't go in a straight line. So for me as well, I would be looking for an entry. And since it already reached the area of interest, I would be going to some time frame that gives me a couple of another, not a lot of entry, but at least a few, like 1, 2, or 3. In this case, the 15-minute gives me that same quasi again. We can see that, right? The uptrend, we have an established uptrend, breaks of the neckline, and it may or may not come back and retest these structures. And that could be an entry for me to get along with the trade that you're already in. So if it comes back, and if it doesn't, of course, that I won't get an entry. But that's the same. I can see the reversal pattern as well in your trade, and I think it has at least the H4. I wouldn't be able to find on my way of looking on the chart on the daily a reason to get short here, but the H4 does tell me this is a great area to be. And the reaction, it's only 20 minutes to the close. So the reaction, if it closes as an engulfing, again, a bearish one, is the confirmation that this is the structure that has made that reaction and is likely to continue, because there is some sellers, they came in previously to form this outside bar, right? And they came again to defend the same structure. So that this looks like a short that I would be trying to catch as well. It looks very appealing to me as well.
Nice. I kind of anticipated the movement.
Okay, I need to show you guys something. I need to show you guys something. So I showed you in the beginning of the live stream, I showed you what my swing trading approach looks like now. Let me show you what my equity curve looks like when I'm scalping. I have great news though. I'm finally in profit again. So this is almost the reverse of what I have with swing trading. I can see slightly over 50% win rate, but this equity curve right here. So we started and we had like small profit, small winner, small winner, small winner, and like this right here I was in a good flow, honestly. And that's just tilt. That's just taking lots of bad trades. And I remember the first few trades. I'm like, oh wow, this works really good. This is going to be such a cool experiment. I'm going to go through this evaluation so quickly. And then because of that, of course, I'm like, okay, start taking bad trades. And I think this is what a lot of traders accounts look like. You have an equity curve where you have like a steady climb, and then it's like give it all back, steady climb, give it all back, steady climb, and then when you zoom out, you have like a downwards trending equity curve. But yeah, if we look at USD JPY trade, it turned out it turned out quite
Positive.
nice. You know, let me see if I can pull up MetaTrader here again for you guys, and I'll show you. Where is it? Where's MetaTrader? Oh, come on, where is it? There it is. But that's, you see right here, we had that rejection on the 5 minutes. So what I'm doing here is there's just two things.
Very
The
nice
whole
move.
approach, yeah, it's just two things. It's horizontal levels and engulfing candles. So if I have a bearish engulfing candle at resistance, if it's like a break and retest, then I short. So that's now hopefully I can continue doing this. And if I only take trades like this, we'll probably see the same results on that account, but with lower win rate. But the problem is, yeah, the problem is that I'm not a scalper. So it's an interesting experiment. You know, we can compare swing trading and scalping and then see, because I think it's good to do that. You know, to
try out different styles.
Yeah, exactly.
Yeah, I think it's a good exercise for everyone. As long as you're very clear what is your style and what is your strength and weaknesses, because if you try different things, you will find, you know, the difficulties. I mean, the reason why you're a swinger has probably something to do with your personality. So when you're going out of your comfort zone, trying other styles, you're probably going to have difficulties that you try to avoid when you decided to be a swing trader. As long as you're conscious about that, I think it's a great exercise to, you know, work on your weaknesses.
Okay, so Saul, if we're looking at USDJPY, would you look at this as, would you be comfortable shorting around these areas? Or
dollar yen? Absolutely. You know,
okay.
I like the fact that we you know, that movement to the downside accelerated, so that, you know, let clear that the momentum to the downside is very, very strong. So now that moment to the downside create a new supply area, a valid shorting area. So if we have a
Can I pull up your screen, because it looks like you're in a trade?
No, I'm not.
Of course you are.
No, I'm not. I mean, I have the one from the pound yen.
Yeah, you have that one. Yeah.
I have the pound yen that I'll let that run. It's already, you know, 20 pips in profit. But
Nice.
the dollar yen trade, you know, I took my scalp, and of course I left money in the table, right? Which is something you have to make peace with, the fact that sometimes the market will continue in your favor and you kind of let money there on the table, but you need to feed your mind and your brain with the opposite thoughts. The fact that many times also the market goes against you after you take profit. So it's always good to be consistent with what you do. So in my case, it's taking those small profits and forgetting about the times that the market runs in your favor. So what I was explaining is, okay, we have these strong impulses to the downside. We had this weak pullback. We entered the selling area. We short. We took profit, and now we accelerated to the downside. So now this area here is a new valid selling area. So if you have a similar pullback like this one, like a channel towards this area, I'll be comfortable shorting again. So now I'm just waiting now on a waiting game. I recognize that on a 5-minute chart we have some support back here, so I don't think we're going to stay where we are. We should be targeting that area. So the market is going to get there. The question is if it does it just breaking down to the downside, or if it's going to pull back and then going down. So I'm just waiting.
Yeah.
Yep.
No, I think that's I would I mean, I like the area that you marked out there on the low time frames above, but I think I might want to short even right before that level gets hit. So you're on the 5-minute right now, yeah.
No.
So what I'm looking at is, let me pull up my chart here. We can compare. What I'm looking at is this. So I have this red level right here. So on the 5-minute, it looks like this. So I'm thinking if we go to the 1 minute, because you're looking at this level, right?
Yep.
But I would probably take a short here as well. If we have a nice reaction here and then start moving lower, I would probably short that move as well.
Fair enough.
Is that you don't think that's would you do that as well, or do you think that's too early?
I mean, no, I see I see that level, and I you can see how that candle was like accelerating candle. It was larger than the previous candles to the downside. So it's potentially a good scenario as long as there's enough money to be made from that entry to the bottom of the range, like to the pivot low, so you can make money inside that range.
Is this the area that you're talking about?
That's where I think we're heading. I think we're going
Okay.
to that area. Yeah.
Because I'm also seeing, to the left, we got like this whole region. I think that is, to me, a really good level. And if we touch this level, then I'm kind of thinking that we're almost reclaiming that support. See if I can these. I'm still trying to get used to MetaTrader. I think, yeah, I mean, that's a good level. The risk to reward. Actually, I might actually be able to get a 1-to-1 risk to reward with stop loss all the way up here. But I need higher risk to reward. I need higher risk to reward.
If I may give my take on dollar yen, I see the same. Let me put my screen on. I see the same price action, right? And this one is where clearly I have a bearish order block on the daily, which is one of the signs that I need for let the trade run. So in my case, it's a little bit different, but this is the sign, and it did come and retest this order block today. So this candle hasn't closed yet. It can test it even further, but as of now, it retested and moved away from it. That's great. That's a trade I want to be in. That's the bias basically where I want to be looking for a short. And if I look to the lower time frames on the 4 hours, what do I see? I see we didn't come to a higher order block on the H4, but it doesn't matter. It did interact with the daily, and it's leaving now a bearish order block in about 10 minutes, and that's the H4. Which is enough alignment for me from the daily to the H4 to lower time frames, H2, H1, etc., so that I can look for an entry. There is however, a hurdle on its way, and if I just look, if I zoom out and I try to get a target, my first target will be, of course, the low of that, the previous low it made before making this retracement. That's the first TP that I would have. And the next one would be the order block on the H4. Since this is the H4 order block will be my entry, right? The bearish order block. It is, at least in my book, it is valid to use the same time frame and target that for the opposite direction. So I would be targeting this order block because of that order block being bearish and this one being bullish. That can be as well a valid stop. But the hurdle that I see in the market is we do have an outside bar. And of course, an outside bar, a candlestick combination is not as strong as the market structure, which is much bigger. But I would assume that there will be some kind of reaction from this outside bar, right? Where it clearly, this level was very interesting for the buyers, and they may do that again. So that's one thing that I see. It's not a reason for me not to get out of the trade if I get it, but it is something that I take into account. And if I think further, I say, okay, it may have a reaction from this area on its way down. Where will it be bouncing off on its way going down? And I can identify on the H1, I can identify 2 areas. This is the H1 order block, right? It will come back and retest that H1, which also is the daily lower border of the order block, but as well there is an outside bar here as well. So if I were to look at this trade, these are the areas that I would be, just waiting, being very selective where price comes back, and I get an entry in here. Of course, not on the hourly, but I would go to the lower time frames to catch a quasi a order block on the 15.5, etc., on its way down. And then if it does do that, I would either target that low, depending on the speed it does that, or the structure below it, which is the H4 order block. But I see that that's very appealing as well to me, as in terms through the eyes of quasis and order blocks.
So what would be like a confirmation for you to go short, Victor?
Sure. What I would do, my confirmation comes from the lower time frames. So I could just, let's say on the 1 hour, I could just wait for, because this is also a quasi, right? We can identify this as a quasi as well. This would be an H1 quasi, right? Where we have an established uptrend, right? Without going any further, we have an established uptrend. It breaks the neckline, and then it comes back to retest some relevant structure, either this one or that one. So my confirmation will come from price reaching one of these two areas, and then on the lower time frame, it does the same thing. So it forms a quasi again, right? Because the fractal nature of the of the market. And I would just go to either the 10, 15, 5, whatever, doesn't matter. Just one
lower
reversal, lower time frame, where it shows me it wants to reverse. And it, of course, it doesn't show that once and it reverses right away. It may show you 3 times, 4 times, and maybe on the 5th times it reverses, and that's fine. I lose the other ones if it triggers me. But because I'm on the lower time frame, of course, my stop can be on the lower time frame. That means that my targets will be 20R, 30Rs, or at least 10, and
Amazing.
that will make up for the the losses on why I'm trying to catch the move.
So I made a quick short again on USDJPY.
You're killing it today, Jonathan.
Yeah, man. we had just a quick one. Made about $9 on this one, which is
nice.
almost a coffee for in Sweden. Nice. It's a very expensive coffee, but whatever.
It is.
So yeah, I shorted here. So we had that reaction, right? And I thought, we shorted that. But then I looked at price action, like it's really struggling to get below here. It's really, it's not getting below that wick, and it's really struggling. So I'm like, okay, I'm going to take profit and I'll wait for the next impulse.
Absolutely, because we're getting close to that support there. So it's going, we're going to see some buyers active now.
That's right, Henry. I do make my own coffee. I do roast my own coffee. It's absolutely delicious. But the thing is, it's still quite expensive. Coffee is super expensive. Like, I went to the supermarket. I haven't bought coffee in the supermarket for like a very long time. And then I went there and I'm like, oh, it's not really that expensive, And I looked at the package and it's like, well, it's much smaller than what it used to be. It's like, it was 500 grams. Now it's like 400. I'm like, what? It's the same price, but it's way, way, way smaller.
That's one of the ways they hide the inflation, right?
Yeah, man. Like as traders, we're like, as a trader, I'm going through the supermarket. I'm like looking at prices and I'm like comparing prices. I'm like, but what if I buy this at this time of the year instead?
Indeed.
Yeah.
Hamed is making a valid point. You are on fire since last week, or you've been on fire.
Last week, since the last 6 months, I would say. But yeah, thank you, Hamed. No, seriously, it's been going quite well. I must say, I must say that since April, like honestly, like when I first started the trading room in January, like trading publicly this way is just very it's very 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 difficult. Like everyone talk with everyone that does kind of like trade publicly, it's difficult. So like I had a tough period trading live, but since April changed a couple of things, and it's
That is a real thing
Kind of turn,
as a
yeah,
trader.
I feel like it kind of turned around, with just one small tweak as well. With that different take profit strategy. Look at this. This is now I'm talking, so I missed that. I would have entered here, but now I'm talking about how awesome I am at trading, and I'm missing that trade. That's what
By
it
the
is,
way, I
though. No,
think
but
I think there is something that we should look that I would like to show everyone. Let me get my screen ready. I will show you guys this. There it is. I think this is it's kind of conflicting because we do have this is EU, by the way. On the daily, what do we have? We have a bullish order block, right? So after we broke that yellow line is a previous high. So after the previous high, we formed a daily order block. And well, first of all, we closed above that previous high. That tells me that this is has all the signs of an actual breakout, right? If it's breaking out, and that's one of the bullish signs that it has a good chance of continuing. Well, the next thing it does is it did form a bearish order block, right? But it invalidated. I'm not showing it, but let me show you that. So it did form a bearish order block, which would be a sign, right? If it held that bearish order block, that would be a sign of the sellers coming into the market. But what it did afterwards was the very next day, it invalidated by closing above it. So it's breaking bearish structures, and at least so far, it has respected this bullish order block. So that, to me, in the macro zoom level, is bullish. That tells me that this could continue to go much higher, because that's what it's telling us. But if you go to the H4, and yes, I see this as well. I see these movements, right, where it is impulsive to the upside. That market structure is still bullish. Yes, it is, and it needs to break this order block and make a lower low here to break that market structure. However, there is something happening with a close of in 1 minute. The H4 will be closing in 1 minute and 5 seconds. And we can already see that it's likely, or it's very possible, that it's going to close as an outside bar. And that outside bar also happens within a previous bearish engulfing. And now it's the bigger picture is still bullish, but we have something happening. We have bearish order flow forming, right? We have this order block that indicates the top, that one, and now we have a accumulation of bearish structures. So that tells me that price is likely to be retesting lower structures. It doesn't mean it's going to break the higher time frames, which is the daily order block, at least not yet. It doesn't tell me that, but it is telling me that it might be going for lower structure, since we don't have much to the left to work with. That's one thing. And the other thing is, maybe this outside bar can be a trick, because if the higher time frame is very bullish, and on the lower time frame it tricks everyone in thinking it's getting bearish, that's a lot of the time the market, we see that how the market tricks the traders into a trade thinking, okay, it's going to go much lower just to shoot up again. Since the higher time frames is stronger, we need to keep that in mind as well. But I think it already closed right now, and we did have that outside bar. So I'm interested now in shorting this area, but I'm only interested in this as the target, because I don't want to hold something too long when it's against the daily. But
it's
I think
interesting.
it's
interesting to see your analysis, because it's so completely the opposite of what I'm doing. Like sometimes we have confluence. Sometimes we're looking at the same level, but a lot of times I look at your describing your analysis and you're looking at your market. I'm like, to me, it makes no sense. But then I look at your numbers and I'm like, okay, it makes sense now. I think
Yeah,
I don't know. So you're Saul. You're probably you got stuff
Yeah,
going
guys,
on. I
I'm
know.
sorry. I have another call starting right now that I need to jump on.
Yep.
So I'll leave you
Okay.
that. But I love your analysis, Victor. Let me know if you take any of those trades, and we'll follow up on next week. And
Nice.
I enjoyed the session, guys. Thank you. Thank you, guys.
Thank you.
Thanks, Jonathan and Victor. See you next time, guys.
Thanks for
we
joining.
always enjoy having you here, Saul. You have so much insight to give us. So thank you for your
guys.
time.
All right, take care.
Yeah,
He did it. He did it. Did you hear that? He said, "Oh, I love your analysis, Victor." Did you hear him say, "I love your analysis, Jonathan"? No, we didn't hear that.
Maybe next time.
I feel left out. I feel left out. I think I need a break. I think I need 10 minutes to digest this. Okay, guys. I'll go think about this, and we'll see you guys in 10 minutes.
Yep.
All right, take care. Not take care. See you soon. right.
And we're back.
I'm back.
Yes. And for the record, we love your analysis too, Jonathan. We all do.
Thank you. Thank you, Victor. Interesting enough, we saw USD hitting that level right now. The level that we talked about earlier, that support. Interesting to see, it could have just shorted straight down to that level. Yeah.
You mean the order block? You mean, or the gray
No,
area?
Saul showed a level, like a support level, where he said, like, I think price is going to go to that level, and exactly that order block area.
That order block, yeah, that's the power of the order block. Even though Saul doesn't recognize them as order blocks, but he sees them naturally, intuitively with his eyes, with his naked eye. But basically, it's a lot of the times, not always, it's the same area that is defined by an order block. Price comes in and reacts.
I mean, for me, it's not.
At least,
yeah. Reacts. I mean, for me, it's not really about order blocks. It's just looking for key levels, but the thing is, like, when you have a strong reaction at a level, usually, I mean, you'll find an order block there,
Mm-hmm. Yeah, it's order blocks are nothing magical. It's just the representation of one side taking control, and when one side takes control, you will have a you can call it imbalance. As you look here, you will see fair value gaps, or you can just express them or look at them as impulses. It's basically the same thing, right? The impulses and the fair value gaps, these things happen when order blocks are being formed. When one side is taking taking the power. So it's basically the same thing. It's one phenomenon, just you can define it by different ways, and that's the same thing that Saul does. He looks for those areas and now he looks it from the eye, not defining it with the open, the high, the low, and the closed data of each candle, which I do. But I mean, it doesn't matter. The point is, we see the same thing, and you do too, in the market, and we try to catch that which it is telling us.
Yeah. Okay, so we wanted to show you again something we've talked about. Basically, we have, see.
Go ahead.
So with Victor's way of trading, he has a win rate of around 30%. Is that valid?
Yeah, roughly. Yes, it is.
And then with my way of trading, I have around 70%. And we've looked at our trading history in TradingView, and I don't know if you want to pull up your TradingView, but what we saw is, with Victor's way of trading, when you have a low,
you mean
low win rate system. Yeah, that's right. So when you have a low win rate system, basically what happens is you have of course, low win rate means a higher risk of having losers, which also means a higher risk of having losing streaks and many losers in a row. And as you can see here, he has a fairly big losing streak, but they're all very small losers. And then he has a couple of big winners. But on this history, not a lot of winners. Many losers in a row, but not a lot of winners. But if you look at the profit, the P&L, still quite profitable. Now, if you look at my trading history, you'll see a very, very similar amount of profit. Okay, so a very similar amount of profit, but this is, more what 70% win rate system looks like. But you also see that none of my winners are as big as some of the biggest losers. So if you look at this one, it's minus $807. and none of the winners ever become that big. That's because I'm looking at a high win rate system with low risk to reward. While if we switch back to Victor, you'll see that he has low win rate but high risk to reward. The losers are only like $42, $51, and then $34. But then you look at the winners, he has two winners, which is 652, 642. Like they're so much bigger than the losers. So his risk to reward on his winners are, quite frankly, just insane. Like we're talking about, between 10 and 20 R on winners.
Actually, I took the stats from the same period. This result is from last week, from Monday to Friday. Although not every day I have signals. And this is the stats on those signals. Mine, there is one trade that was a test trade. As you can see, it was a 1 micro lot just for testing to see if the copier was doing what it's supposed to be doing. And then, but in any case, I didn't deduct that one. I had 18 trades. This is the amount of, and you can see the average winner. The average loss in this account is $50. Not the average loss, I'm sorry. 1 hour value is $50. And the actual average loss is a little bit less because I employ different kinds of adjustments to, my risk. That is, it comes out to be less, the average to be less, because sometimes I limit the size because I know from a subset of losers it's better to have a smaller size, but it doesn't matter. The point is that what the profile of the risk reward ratio, what's important is not the win rate on its own, and that's, I think, what is the key here, the take home information here. It doesn't matter if you are a trader who trades at 70% win rate, or you're trading at 30% win rate, or some other percentage. What's important is it's the win rate in combination with your risk reward. Because in my case, I'm having this is a 38 percent win rate, right? Usually it's a little less than that. It's around 30, 35. But the thing is, it combined with a high risk reward profile where I have at least 6, in this case, more than 6 times when the winners are more than 6 times larger than the losers, it is profitable. And you can see how the expectancy here, 94, if you divide that by the average loss, or even if you use the full stop, which is $50, you will understand that the expectancy is about 2R per trade, which is nice. So it doesn't matter about, it doesn't matter.
It's nice.
It doesn't matter about the win rate in its own doesn't tell you the whole story. You need to have both of them, and it's the combination of those two that will decide if you're profitable or not. And so this goes to say that we should not focus on one thing only, right? The win rate only, or the risk reward only, because if you do that, you only have one half of the equation, right? You have to have both of them optimized for your trading strategy, your stop loss, take profit, optimized for both of them in combination, and this then will make it profitable, your strategy. But another thing I think is let me change the color, because the color, it doesn't suit the the background. Let me see, maybe maybe a red one. Yeah, maybe that's better. What's better, what you can see here is that the different in profiles of risk reward ratio will demand different tolerance from you as the trader, because are you able to withstand these kind of streaks of losses against you and still execute the next trade flawlessly? Are you able to lose 9, 10 times in a row and still walk out of the room with your head up high? Because if you're not, then this way of trading is not for you.
Yeah, and that's my problem. I'm not that's not my type of trading. I'm not really, and also when it comes to the big winners, you need to make sure that you're not taking profits too early. You need to make sure that you allow those trades and those winners to become big winners, because and that to me is the way you're trading. Is there's two it's to me at least two of the things that are the most difficult things in trading for me, and that is having losing streaks and making sure that you're just risking small and just going through that drawdown. And then also when you have a good trade, you're gonna let that run and let that become a big winner. So it's not only do you have you have to make sure that you're mentally prepared for a losing streak, but you also have to have the patience and discipline to not micromanage the good trades.
Yeah, for sure. And it took me a while to be able to pull this off, to manage this kind of profile of risk reward and win rate combination. It's not easy, because as you said, you need to be able to be proven wrong repetitively for a long streak, and still be able to not have fear to enter the next trade, to take the next opportunity. And not only that, when you get that opportunity, sometimes, a lot of times, that's basically how my system works. I will have the profit, the amount that I just lost, maybe in 1 or 2 days in the past, I will have it on my P&L, with my float or profits, where I would be if I close it now, I would break even, right? And if I need to be able to resist that temptation, not to break it, and just to eliminate that loss that I have, that drawdown that I have, but I need to trade the plan. And that's something that I had some difficulty dealing with, because I would just close it as soon as I have a little profit. So my equity curve would then have like big drawdowns, and then I only come back to make a little profit above the whatever that I started off with. But in the long run, that's very difficult to maintain, to become profitable, or to maintain profitability that way. I had to really let go of the P&L, let go of the drawdown. I'm aware of them because I do reviews, of course, at the end of the day. But when the decision in the trades needs to be based on the strategy, which is not based on the P&L. When the strategy was what, and that this is true for everyone. When you're trading, when you're writing your trade plan, your equity curve is not a variable. It's not something you say, when I am in a losing streak, I trade differently. No, you didn't do that. You didn't say that. You didn't put that in your trade plan. So it shouldn't be an input for your decision-making mechanism, right? Your trade plan is only based on those things that you measured. If you did your homework well, you measured that increases your expectancy, increases your win rate, and your risk reward ratio, right? So, and those are the things you need to stick with, regardless what happens with the P&L. And it's very, very, very difficult to do. And it took me a while to be able to trade this way. But it's and this is only I trade EU and GU, and this is only one. Let me get the same arrow that this is only one pair, but I can have both of them losing streaks at the same time or close to each other, like yesterday one and tomorrow the next, and today another pair. And then I would have maybe 20. And it does happen, statistically, it will happen. And I know it does happen for a fact, where I have 15, 20 losing streaks in a row. And still I'm finishing the week, or if not the week, 2 weeks in profit. In event, so it is profitable, but you need to be able to withstand this kind of slaps in the face, basically, as you're taking those losses, because it's not easy, but it is doable. I mean, I've been doing it, so I mean, if I can do it, anyone can do it. I don't think I'm special by doing it. There was one question. If I'm taking, let's see, we have if I'm only taking longs. I think Henry asked me that. Yes. No, I don't only take longs. It just happened to be that the setups were longs because the market was bullish, and that's where the opportunities came at. So no, I don't. I take long shorts all the time, even at the same time. I can be in a short in the morning, and the trade might still be on, and I could be going for a long later on the day at the same time, and it's okay based on the stats that I have. Let's see. Do we have some other questions that I should?
Yeah, I have a question. When you like, what was your journey into trading like this? Like, what have you always traded with this approach with lower win rate, or have you like what? Because it's a very difficult way of trading psychologically. So I mean, for me, and I think I mean, it might sound quite obvious, but for most people, having a high win rate system is probably best, but it's not easy to find it and to execute it. But why? How come you stuck with this approach?
Data. That's the short answer. Just the data. What I did was I tried many different strategies, and before I start excavating and digging deep into what the data tells me, I would have like random results, right? I would have winning streaks, losing streaks, and at the end of the month I would be up or down, but it didn't seem to have like a pattern, like an upwards curve, equity curve. Upwards sloping, and what I start doing was I start doing back testing as objective as possible. That's why I preach that all the time. And I noticed that the system that I have, which was based on moving averages and trend lines and some other things that I used. I don't mean to say that they're not profitable, but the way I was using them, I wasn't extracting the edge. I didn't have much of an edge. The edge came out to be about 0.1 R. Actually less than that. I'm sorry. It came out to be after I think I had about 150 trades, and I was about, I think, 3R up, depending on different settings that I had. And I said, that doesn't make sense. I'm barely profitable, and it's so slim. I gotta fix this. And then I started starting from scratch, checking. What I did was I started one concept, measure what the react is, what the predictive value is of one concept, and you can guess what that concept is. It's the order block. And then I went on to check quasis, and I checked other patterns as well, and I combined them both, and I start checking on my, when the market reacts the way that I expected based on the order block, based on the quasi, how far does it go be against me before it goes to the TP, right? And that's something potent to be focusing on. So yeah, I did some stop loss optimization, stop loss placement, and TP placement, and basically fine tune that continuously until what I realized. And to come back to your question, which I wasn't answering, but to come back how I came to this profile to be trading it, is I measured what the results were if I have a TP which is 1 to 2, 1 to 1, 1 to 1.5, like negative as you're trading, what it would be 1 to 3, and so on. And I plotted each one of them, the equity curve, and I asked myself, which one do I want to have? Which one is the one that has the best profile? And even though having a low win rate is not something I want to have, but when I measure the drawdown, the profit corrected for the drawdown, so the risk adjusted return, this way for my system, for the rules that I have in place, is the best system, right? I can change it so that I'm 1 to 1 or 1 to 2, and it will be easier on my mind. But the metric which I use, which is the risk adjusted return, where you take your profit for a given period, you divide it by the max drawdown that you suffer, during that period, and whichever has the highest metric is the one to me that I should be trading. And that turned out to be this profile where I have a low win rate and a high, as high as possible risk reward. And so basically, I let the data guide me. Lead me into this. It's not something I thought from. I just measure what was past, and I follow what the data told me.
Yeah, I mean that's so basically what you did is you tested a lot of different things, concepts, indicator, price action patterns, and then you tried to find the one that you saw had the best result, and then you just tried to stick with that. And I suspect that using order blocks was much more profitable than everything else. So you decided to just remove everything.
Yes, I think you.
It's a good process to also to. I think it's a very good process because a lot of traders, they think, well, if this one indicator is just a little bit, helps me a little bit, I'm going to add that, and then this indicator helps me a little bit, I'll add that. But then you'll end up with lots of indicators and lots of signals. So sometimes it's best to keep it simple, and also by keeping it simple, you sacrifice a little small profit, because I do think simplicity is in of itself helps you trade better.
For sure. I think that's that's one of the things. If I'm going to be doing this for the foreseeable future, I want it to be something executable, something I can take action on it, execute it fairly easy. And that's not the way of complicating things, having 10 or 6 different indicators where you need to be reading each one of them. As you can see on my chart, although I have a lot of structures on my chart, the ideas that I use are always the same: order blocks and quasi, order blocks and quasi. I'm not complete. It gets complicated in the end anyways, because I have top-down analysis. So I'm layering one time frame on top of the other one, and I've trained myself to see which one is the relevant one, and I don't look at it, doesn't pop out the other time frames anymore. But it's in essence, what I'm doing is quite simple, with a couple of rules that I checked on the data to tell me what rules should I be implementing. But if you take out the rules, those rules anyone can, with their data, can find out what is best for them. But the concept is very, very easy. Just the retest of the order blocks and the quansis, the retrace into those entry order blocks, and it moves away from the quasi. That's it. I don't do anything else. And I'm able to reach this kind of results just by using something very simple. It doesn't have to be complicated.
Yeah, when I first developed my system, I had, it worked great, and then I kind of started going into drawdown, and it felt like that drawdown is bigger than what I normally have. So I started looking at the system. I noticed that it's not working as well as it did. I think during COVID it worked very well, and then after COVID, I think market kind of shifted. So what I did was I went in and I looked at the indicators once again, like what every individual indicator, what are they actually doing, and what are they bringing to the system. And I noticed that the things that really made a good trade was the like the most simple things, like horizontal levels and engulfing candles. So I tried to strip it down, take one indicator off at a time, and notice that it didn't really change the system much. It made it a little bit less profitable, but I had way more trades. So I increased the numbers of available trades. Now I still only take, on average, I would say 3-4 trades a week, maybe. But there's so many more opportunities to choose from, So to me, for me, making it simpler was actually a really good exercise. We have a question here. So I think this one
Yeah.
asking if you're self-taught or if you had a mentor or anything like that when you started out.
Yeah, unfortunately, I didn't have a mentor, and I say unfortunately, and maybe it's fortunate, I don't know, but it took me longer than I think. If you had a mentor who knows, a good system and can teach you not only the system, because it's not about the system, it's about the skills to build a system, which you can then apply to many other to build different kind of system, not necessarily the same one you're being taught. But if I had that, I would have made my but the process, the journey much shorter. But yes, I'm self-taught. I picked different concepts from different places, but nobody was telling me do this or that after in a different sequence. I just followed my the data basically. And yes, so yes, I say unfortunate because it took me a while to become profitable. But maybe it's not unfortunate, because maybe doing it by myself has also a valuable lesson in it, as to I've done many things that don't work, right? And that's you would have missed that if you're with a mentor, right? Because that will tell you, now don't do this, do this instead, and it will save you time. But you wouldn't have discarded the other ideas because you never tested them. I tested them, so I discarded them. So I know what not to do, as well as what I should be doing. Of course, with a limited set of things. There are many things I haven't tested yet. Yeah, that's
Yeah,
that's
I
my
think
my
like we have a comment here saying mentors speed up the process. I think
Yes.
it depends on the mentor. Like it really depends on the mentor. So I think, and it also depends on like finding the right mentor. You have to find a mentor that teaches in a way that you can easily understand. Because everyone learns in different ways and everyone teaches in different ways. And I would also, if you're out there looking for mentors, I would recommend looking for someone that when you see content and when you see that person breaking down trade ideas, make sure that it makes sense to you. Make sure that whatever you're seeing, uh, just makes sense. Because a lot of times you'll have people trading systems where it's like you don't understand what's happening. It doesn't really make a lot of sense, and most of the time that is not the system for you. You'll find trading system where it's like, okay, I can relate to this. I can understand this. I like this concept. Because if you're going to be trading a specific system, and that system works and you're profitable trading that system, most likely you're going to be trading that system more or less tweaked for the rest of your trading career. So it's important that you like what you're doing and you like the system.
Yeah, it's the same thing with the system as with the mentors. It has to be not custom made, but it has to have a good fit with your personality. That goes the same with the mentor. The way that mentor executes, or the strategy he or she uses, needs to be it needs to be a good fit with your personality. It needs to be something that resonates with you. Otherwise, as with a system, if the system is not good for you, for your personality, it's going to be very difficult for you to make it work. It's going
Yeah.
to require for you to be someone you're not. We have a couple of questions. I did see them. One is, do you use that signal on those two pairs? Yes, I only use this one system for everything. So it's the same process, the same top down, the same structures. Everything is the same. Of course, I do have to accommodate for the difference in volatility, but everything stays the same. And the reason that I don't trade all the pairs is because I've noticed that uh, when I focus on one or two pairs and I only trade EU and GU, that's where I get the best results, because this is completely manual. So I need to be watching and following price action as it is developing. I cannot do that when I spread my attention thin. I mean, it doesn't work well. I need to be and need to be able to take every signal, or at least most of them, for this to work, not once in a while. And so yeah, that's the way of course I could go to a higher time frame and be able to trade all of them, but I prefer to doing this way because I don't know, that's where I gravitated towards. Let's see, we have
I've heard that a lot. I've heard a lot that you need to have few pairs to focus on. You need to be like focus on one or two pairs and make sure that it's not too much. But for me, I don't have a problem with that, but I also think it's because I need to. If I would focus on one pair, then I would have maybe a couple of trades a month, because I mark out, daily and weekly levels, and it's going to take maybe a week or two for my levels to get hit before I have an entry. So I guess that's also a difference in approaches,
I think it's about the frequency of the signals, right? I can have 10 signals in the London session, on one pair. That's not compatible with trading many pairs because I'm only one person. So,
Yeah.
but if your frequency is 10 or 3 in a month, then of course you have plenty of time, so you can focus solely on one each time, because that's the limiting factor. I need to be focusing on that pair on different time frames at the same time, and I can only do that with one pair. So if they come in sequence, I can trade more. But the reality is, they don't, take turns in presenting. They may come at the same time, and I need to be able to trade all of them if I'm going to have this, if I want the same results that I backtested. So to me, it made sense to, and there's a limit to how many things at once I can do, how many pairs I can trade at the same time. And if it's too many, then that's what I measured. My results will tell me that it's not the best. It's not. I'm thinking I'm doing more. That's what we always say. Do more does not necessarily mean you're going to get more profit. Doing more pairs, in my case, doesn't mean I'm going to be less profitable. To be honest. So yes, and there's something I think I would like to also show everyone here. These how much to risk per trade is something that is specific to your trade system. We have talked about this. I've talked about lot sizing, position sizing, and Jonathan will be talking about this in the near future as well. But it's, a lot of traders, especially when they're starting off, they're asking, how much should I trade? How much should I risk? And I'm not going to explain how to calculate it now, but it's dependent on the system, and usually it's much less than you think. Usually, not always, because it depends on the system. In this case, for example, right, my risk is, the max risk is $50, right? And you can see that's the 1R. The average is a little less, as I explained earlier. It's 42 in this case, which is about right for going forward as well. This is not the master account. This is just one account. The balance on this is 132,000. So just imagine that I'm risking 50, 40, whatever number, what is, let's say 50. I'm risking 50 a trade on a 132K account. That sink a little bit. I'm risking so little per trade. That helps me with my psychology. I can take 10 losses. I only lost 500. You see how you can use the risk in your favor, instead of it, beating you down when you're on a losing streak. This 10 trades, a losing streak of 10 trades is something that happens with some frequency in my system. It may not be the case at yours, but you have to be aware that your risk doesn't have to be very high. And for sure, in my case, it cannot be 1%. At 1%, I'm gonna blow my account 2 times a month. Doesn't make sense.
Yeah, and I think also it highlights the importance of not only because in the past I've always talked about, I look at your max losing streak, like how many trades can you lose in a row, and then determine your risk per trade based on that. But then what if you have 10 losers in a row and then 3 winners and then 10 more losers in a row? That means you're effectively in a 18R drawdown, even though you only had 10 losers in a row. So it's very important to calculate your risk per trade by your max drawdown, and maybe that was what you were getting into. But yeah,
Yeah, the idea is not to explain it right now, but just to let everyone know that you don't have to risk a lot to be profitable and to be, this profit was 1 week of profit on one account. Of course, you can have multiple accounts. There's nothing stopping you from having whatever number you can think of. There are more opportunities than just one account, and you have to be modest with the risk. It's better to risk less than optimal than over risking, because the risk will come back and bite you if you're risking too much. Yeah, that's what I wanted to say. Not to explain necessarily how to choose your position size, because we can talk half an hour on that easily.
how do you? I want to ask you a question though. Like, how do you deal with the losing streak? Because we have Bell here saying, the losing streak requires strong psychology. So how do you deal with that? And how long have you been trading this way? So how long? Because I'm sure that there's also the aspect of time. If you've gone through this type of losing streaks hundreds of times, then you're just used to it. But let's go back to the beginning. How did you deal with this? Because I guess maybe it's difficult even today sometimes.
It's always a challenge. It never stops. You have to be on your toes. You have to be on point if you want to be able to get the profit in the end, and not have this kind of streaks not cause you to revenge trade, have you to over leverage, do all those bad things that we talk about in the live stream. It's a struggle, or it's a fight every day. It doesn't stop. It's not something that I never have to deal with. It's something that I need to deal with it every day. As long as I have losing streaks, I will have to deal with it. So it never goes away. But one of the things that I learned is I mentioned this, is to not focus on the P&L, right? Just focus on the number of R's. But even so, you can say, okay, I'm minus 10 today, I'm minus 9, or even this week. The other thing, one of the things that I noticed is that in the past, what would happen when I can't be calm? Because to me, that's the defining moment, when I lose my calmness, when I lose my patience with the strategy, when I see this and I say, why did I lose again? And that's the moment I start deviating. I start taking extra trades that are not according to the plan. I revenge trade, or I put on more risk than I should, right? And I measure what happens in those moments. I tag them, and I go back and look what is the results of those behaviors. And almost always I end up, hurting myself. Almost always. So just by having that feedback through your data, you can pinpoint, where did I start deviating? And it is when I step out of my trade plan, when I let this winning or losing streak affect me, and I start doing other stuff. So to me, and at the beginning, this was very, very difficult. What I would do is I say to myself, I have like an agreement with myself, I'm only going to take my mechanical system, and that's it. No discretionary, no adding things on. I'm only and I see that when I do that, when I start doing that, I no longer have that issue. It doesn't mean I don't have to be strong and calm and be balanced mentally to be able to withstand the losing streak, because I still feel them. But I try to be as detached as possible to that. I'm only looking, is this according to, is this within the average or within the data that I have been measuring? Is a -9 losing streak, is this normal? Yes, it is. And as long as it is part of what I've measured in the past, I shouldn't, be alerted. I shouldn't lose my calmness on it. And I should just execute it. My only job is to execute the signal. My job is not to second guess it, and it's not to think how to recover this. No, I don't have to think how to recover it. It's already thought up in the trade plan. The trade plan tells me what to do. I shouldn't be thinking, at that moment ad hoc what I should be doing. If you when you start thinking that, and I in the past I've had a lot of issues with that I say, well, but this is different. This is an exception. If I only take this shortcut and risk 3 times more, I'm going to recoup this, and I'm not going to do it again. It doesn't work like that. It will come back and bite you, and it's just the beginning of your downfall. At least that was what I was seeing. And so I just focus on being as disciplined as possible and adhere to my trade plan as close as possible. And when I did that, automatically you will see the results, and you say, I want to keep it. I want to keep having these results. And how do I keep it? I want to cherish that profitability that I have. How do I do that? It's the same formula. You stick to the plan. And you look for any other way to help you stick to the plan. That's it. Sticking to the plan is very difficult, but it's the obvious, and that's the thing that helps me maintain profitability.
Yeah, I think that makes a lot of sense. There's a comment here in the chat. I'm not gonna bring it up, but usually I ignore comments like that. But it's
Okay.
someone saying that prop firms make money. So basically, what he's saying is prop firms only make money from the money we make from selling the challenges, and the thing is. Actually, let's bring it up because this is important. So usually I just ignore comments like this one, but I think there's a misconception in the world of prop trading because of the fact that there's so many firms out there. You've seen recently there's this. It's a quite chaotic and dramatic industry that we're in here with the prop firm industry, and there's a lot of companies going down because of some shady practices, right? But the thing is with the 5ers is when you get funded, you're trading real money, you're trading live accounts. So it makes no sense. And then think about it. When we're doing these live streams, we want to help you guys. We want you guys to become profitable. We want you guys to make money. We want you guys to be able to withdraw money from your funded accounts. So think about that. Why would we want to help you guys if you're not trading real money and use demo? Because then the company would be losing money. If we help one person become highly successful funded trader, that means the company is losing money if this comment would be true. But we are here because we want to help you guys become funded and make money because you're trading real accounts. So what happens is when you get funded, you have real money in that account. You're trading real funds because you get connected to a pool, and that pool is traded by the profitable funded traders. The better you are as a trader, the more allocation from the fund you're going to get. And then the 5ers have a specific risk team that takes care of the risk of that pool of money in the back end. It's a proprietary trading firm. Okay. Yes, we make money selling evaluation accounts, of course, but that amount of money is not a lot compared to the money made from actual trading. Okay. So there is a huge misconception in this industry. But to be honest, the misconception is there because of the prop firm bubble we had this year and last year, where a lot of firms made money with shady practices, and a lot of those firms are not around anymore. There's a reason why the 5ers is one of the original prop firms, and it's the reason why we're still here. And it's the reason why we have the best trading conditions in the prop firm space. You will not find the trading conditions with any other firms There's a reason why we're here. There is a reason why we're doing these live streams for you guys. And there's not a lot of other firms doing that because we want to help you guys to thrive. We want you guys to be successful. But that's the answer to this question. And I do understand where this question comes from because there's a lot of things going on in this industry, you know?
I can understand that, the prop firms that are, going under, they cause to the trading community a lot of distrust towards the prop firms.
Yeah.
And they are not one rotten apples. They were and they are still, I'm sure, a lot
Yeah.
of rotten apples. Let's be honest about it. But the thing is, let's not throw the baby with the bath water, right? Let's not. This is the real thing. We are one of the first ones. We are the original prop firms, and it's for a reason. It's for a reason. We've been here from years. If you look, we've been one of the pioneers in the industry, and that's for a reason. It's not about if the 5ers were only for the quick buck, they wouldn't be here anymore. The fact
Yeah,
is
and
that
there's a
Yep.
good question here as well. Like, why are you allowing beginners to trade prop? Well, what's happening here is we're giving a chance to traders with talent to make money. We're not giving we're not giving the opportunity to beginners to see if they can make money trading. You need to make sure that you can trade before you get an evaluation account. Evaluation account is not a playground. It's just to make sure that we understand that you know how to trade, and more importantly, we know how you manage risk. Because here's the truth of these, funding firms and prop firm challenges. Can you make money from a prop firm but not being a consistent trader? Yes, you can. Yes, you can. Okay, but can you be can you get funded and have multiple payouts by being not a consistent trader? And you can't, right? So what we make sure is that you go through the evaluation and you trade in a way that makes sense for the firm long term, because we want to keep you. We want to make sure that you're not risking 5% on a trade. If you do risk, insane amount of money on one trade and you pass the elevation, you're probably going to get a call from risk management and say, like, we're going to give you real money here. You're going to trade real funds. You're going to make sure that you take care of that risk management, because it's the firm's money. It's not your money, right? So it's very important to remember that if you are a beginner, if you have no idea what you're doing in trading, don't get an evaluation account because you won't last. Learn how to trade first. That's what we're doing right here. We're trying to teach you, we're trying to show you what we're doing so that you can teach yourself by using our analysis as motivation. And then when you know how to trade, you get an evaluation, because you want to keep that funded account, and you're never going to keep that funded account if you're gambling through your evaluation. So
there's high impact news coming out.
Right.
I think you're making fair points, and I think we can't stress that enough with everyone, because there will be, traders who get frustrated by not being able to make it to the other side as a profitable, consistent trader, and it's easy to blame everyone else for not reaching that. I'm not saying that's the case, but it's a very difficult industry. So you're going to
like
have
there's some comment say, like, you can't, like, you there's no way to stop beginners from losing many accounts. That's true, but like, there's a lot of things in life where, like, people have a choice. People have a choice. If you want to get an evaluation, you want to gamble, go ahead, but it's never going to work. You got to be smart about it. If you want to make money trading long term, you got to learn to trade first. Now, of course, we can't stop beginners from trading evaluation account, but that's also not the point. The point is to give talented traders an opportunity to make more money. I guess that that's fair.
I think it's very fair, and I think everyone needs to take responsibility for their own actions.
Yeah.
Nobody is obligating anyone taking any evaluation. If you're taking evaluation, You should be only doing that after you have validated your system, after you have data supporting the fact that you are a profitable trader. If you don't have that, then sorry to be blunt, but you shouldn't be, or maybe you can do that, but see that as a lesson. You know that you're going to fail that evaluation if you don't have data. That's fine, but then it's your responsibility, it's your choice to trade without having a validated system, and before you have the proof that you are profitable. Because evaluation is a way, is a feedback. It tells you something. I am profitable or not. And you should only
Okay, we're actually, I'm sorry to interrupt you, but we're actually above 2 hours, and I got this massive headache. So I feel like I need to get some rest.
Okay, sure. Sounds like a good plan. Yes, the what I wanted to say is this before I'll wrap it up with a few sentences. Look at evaluation as an exam you have to take for passing whatever and get whatever accreditation, and you have to pay for each exam. Are you going to take that exam without studying? Doesn't make sense, right? You're not going to pass it. You're going to lose your money. So that's what evaluation should be. They shouldn't go there, I'm going to just wing it. I'm going there and I'm going to pay this and I'm pass it. I'm going to have my credit. No, you have to have the skills built first. Then you go and show your skill, and then you become funded or not. That's how I see it. So it's each one person own responsibility to know when they're ready to go or not. And it's we're as Profitability, we're offering that great opportunity potential for those who are prepared.
Yeah, and I'm happy because it literally changed my life. I mean, being able to trade hundreds of thousands of dollars instead of my much smaller personal account. That is such a blessing. The fact that it's available for everyone is just insane. You go back, even 10 years, there's no way. There's no way. Like, well, actually, 10 years was almost when all of this started. But okay, so let's say 20 years. Like, it was really difficult to get funding, like almost impossible. If you didn't have the money, you had to get money from somewhere else. You had to have an investor to invest in you as a trader. And now all you have to do is you have to be good at technical analysis. You need to be good at trading and have good risk management, And if you have that, you don't need money. You don't need money. And that's such a crazy aspect of this new world of trading.
The potential the prop firm industry offers for a trader who doesn't have capital is insane.
Yeah.
The potential is insane. I mean, you don't have capital and you just have to build your skills and put on some money and have, thousands. You put up a couple of $100s and you're able to trade bigger accounts and get, thousands of dollars on each withdrawal afterwards. And you can keep stacking those accounts. I mean, that potential is, I've never seen anything like it before.
Yeah. Okay,
so,
guys.
Let's wrap this up.
We're done for today. Tomorrow we have another live stream. We're going to do some more. We're going to do some more live trading tomorrow. We're going to do some scalping again on EU. At least I'm going to be doing that. Maybe look at gold some. And yeah, I'm going to go get some rest. And yeah, that's it, guys. Thanks for joining today. And I do really appreciate you coming in with all of these questions. Good and bad questions. We're trying to be as transparent as possible here. All right. See
you guys tomorrow. And thank you for your attention and for those questions that you guys keep engaging us with. So thank you, and don't forget to hit the like if you like the discussion we just had, and you want us to talk about these things transparently as we do, because we are real traders, right? We're not selling. We're real traders. I mean, the company is selling, but we are traders. We're not it's not a sales pitch. So if you like that, hit the like button so we know what your preference is and what you guys like for content going forward. Thank you for your
All right.
attention, and see you guys tomorrow. Bye-bye.
All right. Take care. Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide.